Hello and welcome to the Closing Beat, everybody. Happy Monday to you. How you doing out there? Hope all is good with you. We are financial advisors here at Jazz Wealth. Hope you'll check us out, jazzwealth.com. See the marketing that we do there? We pay for that too. That's like marketing on this show. While other advisors are playing checkers, we are playing chess here. And, we're constantly overanalyzing everything. We watch everything and anything that we can. And one of the fun things that has come up is Turnaround Tuesdays. Is Turnaround Tuesdays a real thing? So on Jazz After Dark tonight, I'm going to go through all that data so we can see, is that a thing? Should we be watching out for that? So if you want to check that out, grab a drink, come hang out with me here tonight. Our Wine and Wealth last week for clients, that's a private class that we do for clients there. We talked about the vault inside of Nest Egg and how to utilize the planner there. Cody, do we have a winner for Guess the Dow?
We do have a winner for Guess the Dow. Your winner this week is Bruce
Come on.
Smith. Yeah.
Again?
Our guy. Yes. Again. I don't know if
he won a while back, didn't he?
A while back. He definitely won a while back for sure.
Hey.
Not recently, but yeah, congrats to him. We don't throw the word our guy around a lot, but I would say he's our guy there.
Okay.
So congrats to him. He is a client, so he will take the credit to the account.
He's taking the credit to the account. Good choice there. Congratulations, Bruce. I love it, man. Man, Bruce, a winner. All right. If you want to play, jazzwealth.com/guess the Dow. You don't have to be a client. It just happens. In this case, he won. It is a completely automated thing. So we don't pick. We don't get to pick. Just whoever's closest without going over gets $100, whether it's a gift card or a credit to your account, like Bruce decided there. Let's talk about the stock markets here a little bit. Are you a little bummed out that there wasn't much action here today? Why? What would you be bummed out for? Like Friday was such a big day. It's like, the market chose to work on a Friday and take Monday, take a little time off there. Moody's comes out and threatens our last AAA rating. I believe that's our last AAA rating. Yeah, S&P and Fitch have already downgraded our debt. Moody's says, hey, man, the government need to get their act together. Y'all need to get your spending under control, or we're going to have to downgrade, and we will no longer have that rating there. Remember, during the last two, even warnings from Fitch, the markets responded to that. It was volatile. We was like, oh my God, that's front of the page news. Now, did you see much of that today? Now, granted, this news came out on Friday after the markets closed, but it was like, people don't care this time. We're like, so be it. It's a AAA, now it's a AA. It still sounds like a lot of A's. That'll work for me. I don't know. I don't think we're done with that one there. Now, if we look at the S&P there, normally Fridays haven't been very exciting. In fact, I shared data with you on that in the past, how this year so far we haven't seen that. This last one, of course, was. So we're giving Monday a bit of a break. Also, it's been pretty resilient here during this run-up, actually. So a pretty sharp, what do you call it, V-shaped bottom, right? You fall, we're down, correction territory, and then V-shaped bottom to recover off of that. And, as a joke, I guess we'd talk about it. Maybe it's just the presidential cycle keeping up here. I've shared this with you in the past. In the dark blue there is the intra-year market performance, but then we broke it up by presidential cycle because that doesn't go from January to December, right? So year one, President Biden outperforms himself there, or outperforms the average. Year two, a little sloppy, finishes below average actually there, but that was quite an amazing run, gave it all back and then some. Year three, we actually see him trying to recover a little bit. So if you look at where the markets were, we were just overextended from the presidential average, and maybe we're recovering ourselves, getting back towards it there. Obviously, that is a bit of a joke, but it is kind of cool to see. That's where we stand, that if you believe in that sort of thing, if you follow along with that, then, it's it's more volatile, but it's kind of playing right along there. Interestingly to me, in this rally here, this most recent V-shaped rally, it's the big guys. Microsoft doing its thing. Apple, right? Big V-shaped recovery here for Apple. And you go, well, okay, those have a lot of say in the markets there. Big recoveries there. And actually, you want to know something interesting? Side note, Microsoft, as of Friday, you go over here. Here's the Russell 2000. If you take the value of every single company in the Russell 2000, add them all up together, Microsoft is still bigger than all 2,000 companies. It's not exactly 2,000, but bigger than all of them. Apple, by the way, is the only other company that's larger than the entire value of every single company in the Russell 2000. I thought that was really cool, something to see there. But nonetheless, we have that sort of consolidation of power in the S&P, where if those guys decide they're going to have a big move there, then so be it. Maybe more interestingly than that, we also find ourselves at a technical level. Right? Believe in them or not, whatever you want to believe, we're basically right at the top of a downtrend. And the algorithms, the technical traders, people that like looking at this stuff, you look at that and say, well, we just did a heavy lifting up to the bottom of this downtrend. Well, I don't know if I want to fight that ceiling or potential ceiling. And that's really what you have going on here in the short term. So every little rally is met with less volume, less interest. People are, let me see what happens first. Now, the NASDAQ's a little different story, right? I know we've drawn quite a few lines here on this one, but let's have another line. Make it a Bob Ross kind of a chart. The NASDAQ has broken above that already. And so there's a little less concern or question about where you should be. We've already broken above and confidently closed above the bottom of that downtrend. And so now, with the helpful strength of Microsoft and Apple and all those names, people are more likely to bet that this will go back to highs. We're basically just a stone's throw from those highs there. Now, keep in mind that the S&P is already up over 5% just this month. The S&P, does it normally go up 5% in a month? No, come on. That's not something that's normal there. And remember, a lot of that has been helped out by the tech sector is another way to look at it. You use the XLK and see. Fun fact, by the way, if you want to look at the XLK, do you guys see anything? Look at that. Where's the technical traders? Cup, handle, right? So a really clear, like if you're studying those Japanese candlestick patterns and all that stuff, if you go out to a longer time period, you've got a longer term cup and handle thing. I don't pay much attention to that. I just happen to catch it. And I'm like, no, that's pretty cool. But in the short term, do you buy tech? Look at the run. It's had an amazing run. Do you just jump in now after all of that? Remember the game we played last week? Hey, pretend you're me. Something to keep in mind. The NASDAQ, like I mentioned, broke above the downtrend there. And of course, that leads to a little more confidence that you go back to the highs there. It's up almost 8% for the month. Eesh, right? That's a pretty impressive little rally there. And the Russell 2000, unfortunately, I don't like to pick on these guys, but let's go. We got to get this going here. The S&P and the NASDAQ were up about 2%. I'm sorry, up about 1% just last week. The Russell 2000 down 3%. Utilities, energy, real estate, all the culprits there. Tech is doing its thing. Everybody else is doing just fine there. But that is a bit of the issue in the Russell 2000 as it works its way to bear market territory. Bonds, bit of an off day here. Whether you're looking short term, long term, not a whole lot. Just a tiny bit of volatility there. Crude oil trying to recover after being very extended to the downside and having a pretty rapid little decline as the volatility continues. And gold back to the 200-day moving average, trying to make itself rally just a little bit. If you look around the stock market today, it was mixed sector-wise. Right? If we go into the S&P and we say, just let me see all 11 sectors there. Energy, of course. Hey, man. Energy, of course, being the leader. That's thanks to oil and everything moving higher. I would point out healthcare. Don't give up on healthcare just yet. Healthcare has had that big waterfall drop, and you can see it there, and is attempting maybe a bit of a higher low. We'll see. As I mentioned before, utilities, in the S&P, a little bit weak there still, and real estate as well. So whether you're looking at the Russell or the S&P, that's just an out-of-favor area right now. The good news, I guess, would be if you're a Russell 2000 person, today it showed some relative strength against the other indices. Does that make you feel any better? I don't think it's gonna. Okay, before we move on to stocks in the news, something I pointed out in our Notes from Jazz email this weekend. It's an email that I do on the weekends. Yeah, it's Monday. I don't know. We talk about money market funds. In particular, I showed this chart here. This is the total number of dollars in money market funds, and then we just showed some history to show. So this is where we currently stand, approaching the 6 billion mark. Probably over that by now. And we're going through history to show you money moving into and out of money market funds. Money moving into and out of money market funds. The argument here, or what people like to look at when you're making this a part of your whole, sort of rounded analysis there, is when there is a spike in money going to money market funds, that tends to precede a recession. Or a recession tends to follow. That's how I should say that. And so you can see it. I mean, we got a spike in there, and okay, with the money, went into money market funds. The gray area is the recession. Oh boy, we got a spike in the money market. Oh, we got a recession there. Same thing happened there during COVID, and the same thing could be happening again. We have a rapid acceleration into money market funds. Now, you can make the arguments for different interest rates along the way, and maybe the market was less enticing and all that stuff. But right now, we have money flowing into money market funds at an incredibly rapid pace. What does that do? This is a double-edged sword. This is not just me painting a picture to one side or the other. Check this out. So money leaves the stock market to go into money market funds. I know that. We have thousands of clients all over the United States, and many of them are saying, how about a few bucks in that money market fund? I'll take the 5%. You know what I mean? I don't know about the stock market here. I'll take the 5%. Well, that money left. It's no longer participating in the stock market. It's in money market funds. And so maybe that's part of the reason, right? We see that underperformance in the market and the economy. But the other side of that equation is what happens when the stock market gets cheaper? Let's say we have a pullback next year. I don't know. When the market gets cheaper, you can think of this as dry powder, because not everybody that's investing in money market funds wants to be there forever, no matter what interest rates do, right? When they see an opportunity in the stock market, this will happen guaranteed. And I can't say guaranteed, but this will happen and has happened over prior occasions there. As the recession or any recession or weakness in the economy or stock market starts to show itself, we get excited, don't we? We say, well, this is a good discount. I want to be a part of this. I don't have any money. Oh, I do in my money market fund. Let's take 10% of that and put it in the stock market. So don't just look. If you see that start to pop up as something that's being talked about and you go, historically, money market funds gain in value, the stock market gets weak and the economy goes into a recession. Maybe, but what happens after that? Right? Let's be prepared for things like that as well. All right. Stocks in the news, not a whole lot. Everything exciting is going to happen tomorrow and going through the rest of the week. The earnings season wraps up. We'll have inflation numbers and everything coming out. But as far as today goes, stocks in the news, you got Citigroup. It was in Barron's over the weekend. Barron's basically said that the valuation of Citigroup, meaning what it's worth at the moment, the stock price relative to the value of the company, is good. We like it. We like that it's here. It's got a 5% yield. We're excited about this one. You can read the article if you're more interested in that. That was one of the ones they chose to focus on over the weekend. Tyson, remember the theme of this earnings season, which is almost over when Walmart reports later this week. Tyson down almost 3% on the day. They beat on earnings, but they lowered their guidance. Give us lower guidance, we give you lower stock price. That's what's been happening. Boeing. There's, if you like the whole political thing, there's the APAC meeting this week, and the sort of, the stars of the show will be President Xi from China and President Biden. Xi's over in China saying things. They're like, we're going to be dominant. And then he comes over here and he's like, oh, it's going to be fine. And then Biden does the same thing. So that'll be some kind of headline there, no doubt. But inside of that, you've got Boeing. So China, not President Xi, but China Defense Ministry, Transportation said, hey, we're thinking maybe we'll start buying some of these 737 MAXs again. And so that's one of the reasons you see a big pop in Boeing here today. Other than that, you've got just a handful of earnings. It's going to start, the earnings season is going to start to shift towards retail. So Walmart is kind of the way that is unofficially signifies the end of earnings season, but then it keeps going. There'll be all the retailers, Kohl's and things like that. Home Depot reports tomorrow. That'll likely be the one that gets all the attention because there's not a whole lot else there. And we have one, maybe two Fed presidents speaking tomorrow. I think it's just one. But we'll see. If you have any questions, I'm happy to answer your questions as they pop up here. I will get this thing ready. In the meantime, if you want to hang out tonight, Jazz After Dark, the Turnaround Tuesday data. I had fun with this one, actually, and I'll tell you tonight where it stemmed from and all that stuff. But we'll see. Is that something, or is it not something there? We will see the data and figure out what is good there. Shout out to the candlesticks in the dojo. Yeah, there's classes in there. If you're a client, you want to look, or a research member, if you want to look, just search candlesticks. There's 3 classes, maybe a 4th one in there that'll pop up. So be sure to check it out if you're interested there. Yeah. Kirk says, just don't use credit cards and dollar cost average in a portfolio. Unfortunately, credit cards have no place in our finances these days. There's no good answer. I don't know what to tell you. You can gamble, but yeah, unfortunately that has become an extreme, just a nastiness on your net worth. There's nothing you can do about it there. It's just a tough one there. What else? K-Web might get a nice bounce from a meeting with Xi. Oh, it could be a lot that happens in there. This could be a market mover for sure. I'm just saying it's not, they're kind of stealing the show. It's like the Jackson Hole Symposium. That's not even a Fed thing. That's not supposed to be a Fed thing. That's a whole different event, but they always steal the show. Yeah, it could be things like that. So we'll see. What else we got? CPI guess. So for core CPI, I'm going 4.13. If we go 4.13, that'd be increase just a touch over expected there. Remember, core CPI is what the Fed wants to look at there. And for regular, more retail, what they call headline inflation there, I'm going to go 3.29 on that one. So a little bit less than what is expected. It will be very, very close. Health insurance is what would throw you off there. It's a seasonality thing, right? The turnaround kind of that they have going on in health insurance. So I think those are the numbers that you're going to see. Landon says maxed out is 401k, Roth contributions. There you go. Coming to the end of the year, you're already done. Would it make sense for little old me to start investing in a 403b? Do you have something about that in the dojo? 403bs, we do, but this is a tough one because you have your 401k and your Roth maxed out. Let's just say you're going anything else. I want to invest in anything else. Might be a consideration to use just a regular old brokerage account, right? Now, it depends on how much money you have elsewhere and all this stuff, but it just gets difficult when you start having too much pre-tax money. The best thing, and it makes my job a lot easier, honestly, and makes you with more money, is when somebody has a really good mix. You have choices, right? Because what if you want to do a conversion, but you don't have the money in a particular year? That brokerage account can help you out, things like that. So there's a lot of different things there. I'm sure there's no one-size-fits-all answer, but yeah. Looking at a government shutdown on Friday, I do not think so. No, I'll bet against it, right? So if we're just going to go yay or nay, I'm going to say nay. No, it'll be a lot of media, but no. 20% average on a credit card, you are right. Yes, that is the average, by the way. Yeah, and this is weird. So I knew, and I take this for granted, your credit card, you can take cash from it. I mean, I knew that, but I've been talking to people and just going around the office and stuff. I'm like, man, you see the rates on taking cash from your credit card. And a lot of people are like, what? So what's going on there? Yeah, that's a thing. Was that weird for me to know that? I thought that was kind of common knowledge. It's good news that younger people don't know that because maybe they would do that, but there is a difference in interest rates between using the credit card and taking cash from it. And I only bring it up because sometimes I just assume people know stuff. You know what I mean? And it's like if you come to me and you start talking sports, you just assume that I know what's going on. No idea. Oh, Kirk, you want the government to shut down? Mm-hmm. Why do people say rate cuts cause the market to crash? Who's saying that? Who are these people? Is there a recommended amount of traditional versus Roth IRA? Is it 50% in each? No, and honestly, I slacked on this one a little bit. I was working on what initially was going to be a spreadsheet, and then we were going to build a tool, and we got distracted. But you can, person to person, you can calculate it. Obviously, we need more data than just that. So I was working on a spreadsheet that then I would give to Charlie, and he would program a tool and everything. I get that question a lot. Maybe I should prioritize that. Yeah. Probably look at that. Is November following historical averages? So far, it's ahead of schedule, but that's that's okay because remember where we came from. So if you take the calendar out of the equation for a second, we had a big pullback and we're seeing a recovery from that. So we're ahead of schedule for November historical averages, at least over the life of the stock market. Jeff just got here. He'd like me to start over. Happy to do that for you. That'll cost you $3,000. You just hit the Venmo button or whatever. I will gladly start over. I'll pretend like I didn't even do it too. I'll just go right from the beginning. What's your thoughts on the Trump tax cuts sunsetting at the end of 2025 is when they do? I think there will be an extension of some sort. Not the whole thing, but I do believe that there will be an extension of those tax cuts, especially if we're slow growing at that point. I don't know, a lot can change, but that's just where I stand at the moment. We will see. All right. And of course, depends on politically how things go. Those things are going on. All right, I will wrap it up there, and we will be back tomorrow. Do this all over again, hang out here. Appreciate you guys watching and everything. Wish you a good rest of your day. And tonight, Jazz After Dark, if you want to hang out, Turnaround Tuesday. The data on that one. Should we care or not? Adios.